Kaspa just experienced one of the most violent price swings in recent crypto history, down 87%, then a 5.5 times bounce, all within 24 hours. Right now, it's clinging to a critical support level, and what happens next could determine whether we see another leg down or a massive reversal. Exchange outflows are surging, open interest is climbing back up, and a major Layer 2 integration just went live. So is this the bottom, or are we about to fall through the floor? Let's break it down. What's up, everyone? Welcome back to the channel. If you're new here, hit that subscribe button and smash the like. It actually helps more than you think. Today we're diving deep into Kaspa's current market structure, the key levels every trader is watching, and what the on-chain data is screaming at us right now. Trust me, you don't want to miss this one. Kaspa's recent price action looks like a battlefield. Over the last month, it surged 30.50%, which sounds great until you zoom out and realize it's still down 26.60% over 6 months. That's the classic crypto whipsaw, short bursts of adrenaline followed by long, painful corrections. The market's been oscillating between hope and despair, and right now, we're stuck in the middle of a critical decision zone. Kaspa is trading between 5.7 cents and 9.157 cents with major resistance at about 10.779 cents and a support floor around 4.379 cents. The RSI sits at 55.60, which is basically market purgatory. Not overbought, not oversold, just neutral and honestly, a bit annoying. The awesome oscillator and momentum indicator are equally uninspiring, confirming that we're in a choppy, indecisive phase. Bulls are defending mid-levels, bears are prowling at support, and nobody wants to make the first move. But then things got spicy. According to Cade O'Neill on X, Kaspa just broke down from a months-long consolidation structure after that shocking 87% collapse followed by a 5.5 times pump in a single day. That's not normal price action, that's liquidation chaos. Right now, Kaspa is desperately trying to hold the 6-cent level, and if it breaks, O'Neill is watching two secondary support zones between 5.5 cents and 5.2 cents. In my opinion, this is where things get interesting. A break below 6 cents doesn't necessarily mean doom, it could just be one more shakeout before a real reversal. But if 5.2 cents fails, we're looking at a potential trip back toward 4.379 cents. And that's where long-term holders start sweating. Now, Kaspa Daily adds another layer to this drama. They point out that some liquidity remains down to 5.5 cents, but the major cluster is sitting between 7 and 9 cents. That tells us that traders are positioning for a bounce back into that range, not a deeper collapse. In other words, the smart money isn't panicking yet. They're accumulating. And honestly, I think that's the most bullish signal we have right now. Exchange holdings of Kaspa have dropped to their lowest level in a month. That means people are pulling their coins off exchanges and moving them into self-custody. And we all know what that signals. Holders are not planning to sell anytime soon. When coins leave exchanges, supply tightens, and tight supply eventually leads to explosive moves when demand returns. I'm watching this metric closely because it's one of the most reliable early indicators of a trend reversal. Now let's talk about open interest. After the recent liquidation cascade that wiped out over-leveraged traders, Kaspa's open interest is climbing back up across nearly all major exchanges, except Gate.io. That's a fascinating divergence. While most traders are re-entering the market and rebuilding positions, Gate.io participants are still deleveraging. In my view, this suggests that the worst of the panic might be over on most platforms, but there's still lingering fear in certain pockets of the market. That's actually healthy. Markets don't recover in straight lines, they recover when skepticism is still present, and that's exactly what we're seeing here. And here's the kicker. Here's the critical detail. Out of the 10 biggest Kaspa transactions in the last 24 hours, 8 were outflows from exchanges. That's not random, that's deliberate accumulation by large holders who are betting on a recovery. When whales move coins off exchanges, they're not day trading, they're holding for a bigger move. This is the kind of on-chain data that separates noise from signal, and right now, the signal is saying accumulation phase. Given the recent volatility and the jarring price action, Cade O'Neill expects some range trading between 5 cents and 7 cents. I agree with that assessment, but I'd add one thing. If we hold above 6 cents for the next few days and start seeing volume pickup, we could see a quick run back towards 7 to 9 cents, where that major liquidity cluster is waiting. That would be a high probability trade setup. Enter near support with a tight stop below 5.5 cents and target the liquidity zone above. It's not glamorous, but in a choppy market, boring setups often have the best risk-reward. Band Protocol just went live on Kasplex, which is Kaspa's official Layer 2. This is a huge deal for anyone building on Kaspa. Band is a decentralized data infrastructure provider, and its integration means that Kasplex now has access to real-time, verifiable price feeds from sources like CoinGecko, CoinMarketCap, and Kraken. Why does this matter? Because DeFi applications need accurate data to function, and without a trusted Oracle solution, you can't build lending protocols, derivatives, or synthetic assets. Band's presence on Kasplex means developers can now build advanced financial products without worrying about data manipulation or centralized points of failure. Here's how it works. Band chain validators request price data from multiple sources, aggregate it, verify it, and finalize it on-chain. That verified data is then relayed to Kasplex smart contracts, which can be read directly by applications like Fervent. Fervent is one of the first DeFi projects leveraging this integration, and it's pulling data directly from Band's standard reference contract. This ensures that every transaction is transparent, accurate, and tamper-proof. Kasplex runs on Kaspa's UTXO architecture, which delivers lightning-fast throughput, low fees, and modular design for seamless integration. That's a technical edge that could attract serious developers if the ecosystem continues to grow. And with Band protocol now live, Kaspa has the Oracle infrastructure to support real financial applications. This is the kind of development that doesn't pump the price overnight, but it lays the groundwork for sustained growth over time. So, where does that leave us as traders and investors? In a weird spot, honestly. Short term, the chart looks brutal. We're range-bound, choppy, and still digesting that insane 87% drop. But medium to long term, the fundamentals are quietly improving. If you're a swing trader, this is a range trading environment. Buy near support, sell near resistance, and don't get greedy. If you're a long-term holder, this might be one of those rare moments where price action looks terrible, but everything else is pointing toward accumulation. One more thing to consider: volatility. Kaspa is clearly a high volatility asset, and that's not changing anytime soon. The fact that it can drop 87% and then pump 5.5 times in 24 hours tells you everything you need to know about the risk profile here. This is not a coin for the faint of heart. But if you can stomach the swings, the reward potential is undeniable. Just make sure you're using proper position sizing and stop losses, because this market will punish overconfidence faster than you can say liquidated. Alright, that's it for today's breakdown. Whether we bounce from here or test lower levels, the next few days will be decisive. If you found this analysis helpful, go ahead and drop a like, and if you haven't subscribed yet, what are you waiting for? We're breaking down the markets every single day, and I don't want you to miss the next big move. Check out my other videos on altcoin setups and market structure, tons of value there. Thanks for watching, and I'll see you in the next one. Quick reminder, this is not financial advice. Crypto is highly volatile and risky. Always do your own research, never invest more than you can afford to lose, and use proper risk management. Stay safe out there.